Hey everyone, welcome back to Corporate Decoder, the place where we decipher the corporate world. Today, we are diving into UnitedHealth Group's latest annual report. It's a hefty document filled with numbers and legal jargon, but don't worry, we'll break it down in an easy to understand way. Let's just hope that after reading this report, our healthcare is as healthy as UnitedHealth seems to be. This report has two major things people care about: how much money they made and did they stay out of trouble with the law. We will cover those in detail, as well as some other interesting trends in the business. First, let's get some terminology straight. When you hear we, our, or UnitedHealth Group, that's referring to the whole company, UnitedHealth Group Incorporated, and all its smaller parts. The company has two huge parts called Optum and United Healthcare. They both contribute to UnitedHealth's overall mission to help people live healthier and to try and make the whole health system work better for everyone. Optum is all about improving how healthcare works. Think of it as the brains and technology arm. Optum has clinical experts, tech, and data to try and make healthcare simpler and more effective. It has three smaller parts. Optum Health, which focuses on patient care. Optum Insight handles the data, research, and consulting, and Optum Rx takes care of pharmacy services. United Healthcare, on the other hand, is more about offering health benefits plans to people. It has three parts: United Healthcare Employer and Individual, that serves consumers and employers. United Healthcare Medicare and Retirement, focused on health benefits for seniors. Finally, United Healthcare Community and State, for the economic disadvantaged. So how did the company do? For the year, revenues increased a solid 8%. The company brought in a whopping $400.2 billion. However, they had net earnings or profit of $15.2 billion, which was down from the previous year. We'll have to dig in and see what happened. The great news is that the business is growing, but are there underlying issues to consider? Speaking of issues, UnitedHealth faced a major challenge. Change Healthcare, a key part of Optum, was hit by a nasty cyberattack. This attack disrupted services and exposed personal information. As a result, the company spent a great deal of money, $2.2 billion to be exact, responding to it, and the disruption cost Optum another $867 million. Yikes. The cyberattack was a huge problem and has cost the company a great deal. The report estimates around 190 million individuals were affected. The company is saying that they do not believe the data has been misused at this time, but it is possible that legal action, harm to the company's image, and regulations could impact their results in the future. Now let's look at where UnitedHealth gets its money. A significant portion, 40%, comes from CMS, the Centers for Medicare and Medicaid Services. This highlights how important government programs are to their business. One thing that looks good is that Optum Insight has a backlog or contracted future business of $32.8 billion. This provides a safety net for future earnings. One risk to keep an eye on is Medicare Advantage. Government funding for this program is under pressure, and changes to how CMS calculates payments could impact UnitedHealth's revenue and ability to offer benefits. CMS rates affect a great deal of the business, so it is important to understand this risk. UnitedHealth operates in a heavily regulated industry, and this creates additional risks. Our analysis is that if they fail to follow all the rules, they could face fines, penalties, or even be restricted from doing business. The good news is that the company does have an audit and finance committee that is in charge of looking over and making sure that the company's cybersecurity is up to par. They are also aware of the constantly changing landscape and are working with cybersecurity firms to assess the company's cybersecurity on a regular basis. The health insurance industry is always changing. UnitedHealth faces competition from other companies, including new ones with innovative ideas. If UnitedHealth doesn't keep up with technology and changing customer needs, they could lose market share. The report also mentions the risk of economic downturns. If the economy struggles, people may lose coverage and governments may cut funding for healthcare programs. This could hurt UnitedHealth's revenue and profits. Before we get into management's plan, let's take a quick look at their finances, since the price is always right. As of June of last year, the aggregate market value of voting stock held by non-affiliates, or public float, was an astounding $468,433,146,650. This is calculated by the number of shares held by the public, the price of the share. As of January 31st, there were 914,712,333 shares of stock outstanding. Scrolling down to the consolidated statements of operations, we can take a look at a more detailed breakdown of the money. In 2024, premiums generated $308 billion, and revenue from products such as prescription drugs was $50 billion. With such huge numbers, it is easy to see how it is a leader in the healthcare industry. But also, it is important to realize the great responsibility that the company has to all stakeholders, since they are in charge of making a lot of people's healthcare available. The key initiatives are to grow the amount of people with coverage, to provide value-based care, and increase the company's efficiency. It will be interesting to watch the company in the future to see if these goals can be realized. The report also notes some key changes in leadership. Heather Cianfrocco is now the CEO of Optum, and Tim Noel is the CEO of UnitedHealthcare. These leadership shifts signal a new chapter for these critical divisions, and it will be interesting to see if the company culture shifts at all with the changes. Okay, so what about legal matters? As with any company of this size, legal challenges are pretty much business as usual. UnitedHealth is dealing with lawsuits related to healthcare benefits, malpractice claims, and other business practices. These legal battles can be costly and could affect the company's reputation. The good news is that as a whole, management believes that the company's disclosure controls and procedures were effective as of December 31, 2024. This speaks to the great responsibilities that management has to the government, investors, and of course the people they provide care to. The company also states that cybersecurity is taken seriously at the highest level. The Audit and Finance Committee receives regular updates from the Chief Digital and Technology Officer and the Chief Security Officer on critical issues related to the information security risks, cybersecurity strategy, supplier risk, and business continuity capabilities. Also, a leading cybersecurity firm is serving as an advisor. It seems like lessons were learned from the cyberattacks. So, what's our take on UnitedHealth Group? UnitedHealth is a behemoth in the healthcare industry. Its dual approach with Optum and UnitedHealthcare seems strong, positioning it to capture value from both the technology and services side, as well as direct consumer benefits. However, the increasing regulatory concerns of Medicare and the aftershock of the Change Healthcare cyberattack introduce uncertainty. One big opportunity is that the company appears to be focused on the transition of care. The success of this relies not only on adopting technology, but making strong relationships with providers and facilities. In conclusion, UnitedHealth Group presents a complex picture. While strong financials and strategic positioning make it a leader, regulatory headwinds and external risks need to be carefully monitored. Thanks for watching. If you found this decoder helpful, please like, subscribe, and let us know in the comments which companies report you'd like us to break down next.